Wonderful, wonderful. So, a very good evening to everyone. Trust everyone is doing great. It's a beautiful, beautiful Sunday evening, and we are just about to get started with the Traders Hangout. And today we have an amazing, amazing guest in the house, a personal friend of mine. Someone I deeply, deeply respect, and someone who I know is gonna be, you guys are gonna absolutely have a great time with just sharing. Remember, guys, the reason why we started out with the Traders Hangout, why we curated this program, why we started this program was to give an opportunity to be able to hear from traders, to be able to share experiences, real life traders, people who are, who've got experience in the financial markets, people who are, who are actually doing this steadily. And this is very important because, in the FX markets, there tends to be a little more marketing than content, than real stuff. So it's very hard to really know what real traders experience. And I just felt that it was going to be amazing. And yes, I mean, the feedback has been superb. We had the first session with Nancy, and it was superb. I'm sure that a lot of you, whether you're new or you've been trading before, you're able to glean off of that session. And today we have Mr. Mokom Ndzah. Listen, guys, I'm going to read you his profile very shortly. I mean, don't be intimidated. Well, it's it's pretty exciting. I can see him in the background right now. Got the smile. I've told him. I mean, he's in the office. I've told him. I mean, that office, superb, wonderful looking office. He's going to show us that office. Some of what the Forex money is doing for himself, but he's going to show us that. But really though, Mokom is an exciting. I mean, he's grown a very interesting career thus far, and is still growing it. He is the CEO of Stoneshed FX, and Stoneshed FX is Cameroon's biggest money service business that focuses on international payments, foreign currency risk management, and forex trading. So it's like it's a merger, and he's got experience that spans Citibank in Cameroon, and a number of international, especially I can't say it all, but if you have watched out the preview to this program, you should have seen some of the amazing experience that he's been able to gather. I know some of those experiences include stints at Amplify Trading UK, and just amazing experience. So one of the cool parts of it is that he's got a view from the institutional side of trading. Having worked with, having got a stint at Citibank Cameroon, as well as the retail side of it, which that type of a merger I think is always fantastic. So you get the opportunity to be able to have insights on both sides. So, and of course, I mean, he's also got a master's degree in Mokom, you're going to correct me if I'm wrong in this, but I think it's in finance and risk. I'm going to be bringing you on very shortly so you can comment. Everyone can see you from the University of Canterbury in Kent, I believe so. Just not if I'm saying if I'm correct. Not quite. Okay, you're going to share. You're just going to correct me when we get on. So, but in summary, it's an amazing array of experiences that's very useful. So today, without wasting too much time, without getting us too much, I want you, if you're listening live, to just say you're here. Help me maybe put a fire emoji or something. Help me welcome my brother, my friend. So wherever it is, before I bring him on, before we begin to get into today's session of the Swavely Markets Traders Hangout, I want you to put in your comments. There's a comment section wherever it is you're watching from. So you can put in, oh, it's great to be here. It's great to have you here. Just put it in the comment section so we can appreciate, letting know that, hey, we're excited to have him here with us. Okay, guys. So if you can hear me, I'd like to see those comments so we can put it up. All right. Whilst he's looking. I mean, he's looking pretty chill. I mean, I feel a little bit overdressed right now. I mean, considering considering how chill he is. I hope you guys can find the comment button so we can just do this and we can proceed. But anyway, I'll give you an opportunity to do that as we go along. So I'm going to be bringing on my friend, my brother, Mokom Ndzah. Hi, bro.
Hi, how are you doing?
Not bad, not bad. How are you? How's Cameroon today?
No, Cameroon is calm, thank you. Hello, can you hear me?
Guys, can you hear me now? Mokom, can you hear me?
Yeah, I can hear you loud and clear, David.
All right, wonderful. We had a little bit of a network issue somewhere along the line. I can see that folks are getting in, so I'm going to just put some of the comments that are saying welcome to you. So this is Shegun Adebayo. Oh, he said network issue. So Mr. Ladapo is here. He's saying do the 5. Okay, so we've got various traders in here. Ishaya Abamu is saying it's great to have you here. So, just to let you know that different folks from different places are, saying hello to you and very excited to have you here. Okay. You're looking nice, by the way, bro. You're looking nice.
Not as nice as you are.
But I was just saying how overdressed I feel. I mean, we were talking just before we got on air, and we're talking about the fact that I've got the suit on, even though it's the suit is almost becoming second nature to me, actually. So
yeah.
So it's great to have you here, bro. It's great to have you here. How are you doing, bro? How's Cameroon?
No, Cameroon is calm, warm. So it's a great evening.
Yeah. I mean, like I can't. I always tell you I can't wait to have you host me here. I mean, by the way, guys, if you're in Abuja, probably Mokom, am I allowed to announce this?
Yeah, you can.
If you're in Abuja, Mokom is coming to Nigeria. First time in Nigeria, Mokom, right?
Yeah, it's my first time.
So first time in Nigeria, you're coming tomorrow.
Yeah.
And I can't wait to have you here. I mean, so much to talk about. So if you're in Abuja and you'd like to see, I'm going to be his personal conduit person here in Abuja. So if you need access, you can just. So listen, Mokom, it's amazing. I just read out your profile. If you want to correct me on I know you have a master's degree in finance and risk from the University of Kent in Canterbury, correct?
Yeah, yeah, I do.
Right, and you also have you had stints with Citibank in Cameroon,
Yeah,
correct? And
yeah,
Amplify Trading in the UK. So
yeah,
this is a whole lot of very interesting experiences that you've had, and now
yeah.
you run Stoneshed FX. Now you run Stoneshed FX, which is Cameroon's literally Cameroon's biggest money service business, focusing on international money payments, foreign currency risk management, and forex trading. How does that feel like? Do you have a sense of an accomplishment, like having gone through all of where you started out from? I'll get to the beginning of where you started out from,
Yeah.
but what does that feel like, being where you are today, and
Feels normal. I mean, you feel hungry, you want to go, you want to do more. I mean, if you're an
yeah,
entrepreneur or if you're a business person, I think
yeah,
the only thing you want to do is to be better than the person you were yesterday. So
yeah,
you just keep on going, but I can't complain. I'm grateful to where I am today. I've got opportunities that a lot of people haven't had, but it's
yeah.
okay. It's been amazing.
It's okay. Well
Yeah.
said. Okay. All right. I'm just trying to get us to one minute. We're gonna talk about in a more relaxed way. We're gonna talk about trading. We're gonna talk about Africa generally, and we're gonna talk about
Absolutely.
opportunities, and then we're gonna talk about tips for traders.
Okay.
A lot of folks who are either listening in live now, or the people who are gonna listen in at the replays of this, because it's gonna be largely be either new people or people who are experienced. And of course the journey of trading is it's not a linear journey for a lot of people. It's not like you just start and then you become successful. For a lot
Sure.
of people, it's a journey that's got like a lot of curves in it, a lot of so we will talk a little bit about tips for success, especially because you have all of these varied experiences from institutional side of trading to the retail side of trading. So we can bring all of this knowledge together and you just get a couple of tips that can help people along the way. But before we do that, let us talk about how you got into trading. Let's talk about, like, how did you get into this business? Like, you know, I'm pretty sure there's a story there. There usually is a story for a
Absolutely.
lot of people. Yeah.
Absolutely. I think you know Terence, right? Terence.
Yeah, I know Terrence. Yeah, I know
Yeah.
Terrence.
So 2000 and so back 2011.
Okay.
So 2009, I'm fresh out of the uni in Cameroon.
Yeah.
I've got
Yeah.
a BSc in banking and finance,
Okay.
and I run into Terence, and this guy is talking about financial markets. The only thing I know about financial markets is Warren Buffett is the richest man in the world.
Okay. Yeah.
Literally zero,
Yeah.
nothing. And
Yeah.
he's talking about George Soros and spitting out fire, and I'm like, what the hell? A guy
What's
can
it?
make a billion, yeah, like a guy can make a billion in a day. Is that possible?
Even.
So, for me,
Yeah.
what put me to trading was it was the money. It was the
What's the money?
yeah, it was the money. It
I
was
mean,
possible.
your story is not so
Yeah,
different from Nancy's story. We had Nancy here a couple of days ago, and she was like,
yeah,
we heard on radio where someone was, she was driving, and then the person was talking about making a certain amount of dollars every day, and she was
absolutely.
like, so that's a similar experience that you have, and a lot of people.
Absolutely, yeah. It's all about the money
Yeah,
until you get in and then you discover, okay, it's a market. It's got it's human psychology,
yeah,
crowd mentality. So you can't
yeah,
predict what is going to happen day in, day out.
yeah,
So
yeah,
most of the times people hype and they tell you, okay, I make $1,000 a day, $2,000 every
yeah,
day.
yeah,
That I'll tell you today from my experience. I don't want to
yeah,
say it's a flat out lie. I've never seen someone who
yeah.
consistently makes a fixed amount of
Make
money
a
in the
certain amount
market
of money. So
every day. Yeah.
yeah. So the interesting thing is that, because I'm always about dispelling the myths, like people who try to post pictures of Ferrari and get folks excessively excited, as
Yeah.
opposed to get folks to calm down, learn, and then be profitable over the long term. You
Absolutely.
know what I'm saying? So
Yeah.
and it's a common story, actually. It's a common story for a lot of people who come into the markets. They're coming first through the excitement. So what
Yeah.
we're trying to do, for instance, at Swavely Markets is like try to really get people to understand the real stuff. And when they understand the real stuff, they can now build upon that foundation to be successful for the long term. So
Hmm.
very no marketing, no hype, no none of
Absolutely.
those. feel good type of things. You know what I'm saying? So in terms of like going from that place where you started out, where it was like, oh, you wanted a billion or
Yeah.
something. I mean, how did you go from you've obviously gone very far in the FX markets right now. Even if you were not the CEO of Stoneshed FX, which you are, if you were a retail trader, you'd still, from all of these years, I've gathered a lot of experience that you can share. How did you go from that point of wanting to make all the money to the point of actually stabilizing your aspirations, and just share with that sort of growth process?
Okay. For me personally, I come a little bit from a political background, so I had
Okay.
uncles who were in government, and one thing I learned about money was you want to talk to money about someone who is rich.
Yeah.
So what I did when I wanted to start trading was I looked for a very good autobiography, and I was
Okay.
lucky. The first one I read was George Soros's autobiography.
Okay.
After that, I read the Reminiscences of a Stock Operator by Jesse Livermore.
Okay.
Yeah, which was good, and it built the psychological part of
Yeah.
trading. Now you get in, and then you have all of this forex trading for dummies all around.
Yeah.
Everything a normal person an average person who wants to get into trading do. I did the
Yeah.
same thing. Downloaded a couple of PDFs on my uTorrent.
Yeah.
It's just browsed through all of the
Yeah.
information, technical analysis,
Yeah.
MACD, RSI, everything, and then
Yeah.
3 months later, I told my uncle I could be a master trader and he should set me up a trading account. So this guy gave me $10,000, and I
That's
blew
lucky for you. Not a lot of
it.
people can have uncles like that. So you got started from
Absolutely.
like the high end, yeah?
Yeah. And the funny thing was I blew it all out. And this guy used to work for Deloitte in London. So
Okay.
so what I'll do is at 8 p.m. when he's coming back from work, I get out
Yeah.
of the house and go for a walk because he's going to be like, "How was trading today?" I don't
Yeah.
want to look at this guy and tell him your life
Yeah.
savings are 3 grand, I'm down 4 grand.
Yeah.
The cowboy trade, you always think, okay, I've lost 10 trades in a row. I could take the next trade with more risk, which is going to
Exactly.
bring me more money and all that. So
Exactly. So
after,
getting that
yeah,
and this is something a lot of new traders actually experience. That sense of euphoria after you sort of get a couple of trades, you think that okay, you totally abandon risk management, you totally abandon position sizing, you're no longer doing all of those things. You don't even care. You feel like, oh, at this pace, I'm going to be rich in no time. You know,
absolutely.
so like let's quickly pick lessons from that, because the object of this is to share real life experiences so that people can pick lessons and be better. Like they can be better at their own trading. Okay, so one lesson that I can pick from that story in terms of how you like moved was, and this is especially useful for new traders, even for existing traders, do not get into some type of euphoria. Don't ever get to that point where you feel like you're on top of the world and you can't position sizing. And for the benefit of new traders or people who are watching, who you do is actually about quantifying, no matter how excellent the opportunity is, quantifying the risk on a particular position and ensuring that it is a fraction, okay, of the entire account size. And usually, best practice usually at about 1 to 2%. They're about even less, depending on the kind of trading strategy. But that's just like a tip. Because as we go along, I want to hear like traders. I want traders to have a couple of notes and to just note from real life experiences. So, anyways, you went through that, and
Yeah.
clearly you realized that hey, I'm
Yeah.
going to need to learn a lot more for this to work, right?
Absolutely. Absolutely.
Yeah.
Absolutely.
So you clearly, and this is also something that other people also experience, getting in, realizing that hey, you can't take the shortcut to this. You really have to learn. If you're going to make this a successful part of your, the activities that you really have to learn. How did you now eventually approach learning?
So
How was that how did that process humble you to the point where
it's normal. You've been in the UK for 1 month, fresh out
yeah,
of Africa. You've never had $10,000, and then you
yeah,
burn $10,000. It's
yeah,
pain. It's
yeah,
excruciatingly painful. So
yeah,
so what happened to me was I was lucky enough to go to a uni, and one of my lecturers was a hedge fund manager. She managed a convertible arbitrage fund out of Japan.
Okay.
So she was retired, and she taught me a portfolio theory and asset pricing. And she was like, this management, when you manage funds, and you need to learn. So I kind of understood that when it came to trading, a lot of people lost money because they didn't get the right mentorship. So they were learning from someone. So so there's this adage, people say good traders don't write books because they're so busy making money out of the market. So I learned it the hard way. So I got hooked up to Wilder Lucy, who used to be managing partner of Amplify. And he was like, okay, we're going to give you an opportunity to come on our desk as an intern. So I started at Amplify as an intern. And these two guys were really interesting because they traded for Dutch Bank. They traded the Eurobond, and the short market. So these are bond futures. So funny enough, I didn't start trading Forex.
Forex, okay. You started with futures?
Yes, I started trading futures. I still trade futures up to today.
Okay, wonderful.
So
you had this guys who were very experienced and who were also very interested in your growth. I'm cared about you growing.
Absolutely.
So still goes on to the point of the importance of mentorship, proper mentorship in the journey of a trader. So it's not like you're not like swimming in the in turbulent waters by yourself and unsure of your overall outcomes. That's very interesting story. So obviously through that then you went for the masters. I'm pretty sure that was one of the reasons why you had that choice for the masters in risk management.
Finance, investment, and risk management was actually the other reason why I chose that, because you kind of understand that it becomes a game of consistency.
It's
no longer about the one trade that's going to make you rich, but a bunch of trades. It's a game of averages.
Absolutely.
It's a game of averages. So that was it with Amplify. So I ended up being at Amplify for 6-7 months. Then a prop firm, GTC, which was run by the former head of bond trading at Dutch Bank, Babas Bedo. He's from Nigeria, actually, but he was born in the UK. So I was recommended to him and they hired me. So I came in as a full-time boom trader and I was trading a strategy called the butterfly. So I did my time.
I'm pretty sure that information is proprietary, but I can imagine a couple of people feel like, oh, Mr. Mokom, please tell us a little bit about the butterfly strategy. It's just general ideas in terms of like what the foundations of the strategies.
Pretty much financial markets, you've got three main players. Right. You've got the hedger. The hedger is pretty much some guy who wants, think of an airline company. What they want is zero risk, zero volatility on the price of oil. They want to make sure that at the beginning of the year, if they build a financial model to project their earnings, they're going to be able to fix their cost.
So they can also project what their overall profits would be.
Definitely. So that's when you hear about expected earnings. So the actual earnings were better than the expected earnings. So what they do is they would buy forward contracts or future contracts to fix the price of petrol, because their main what they spend much money on is fuel.
Fuel.
So they are not coming into the market to make money. They are coming into the market because they've got a need of the underlying asset class, which is petrol. So you
basically want to hedge their risk. You basically want to hedge their risk.
Absolutely. Now we've got another class of guys who are the arbitrageurs or the arbitrators. So pretty much he's the middleman. So he buys, he brings the liquidity into the market. He wants to make sure that I can buy in Japan at $1 and I can sell it in New York at $1.50. He gives no damn if the price is going up or if the price is coming down. Just wants to buy and get out of his position like every single day. So he closes in what we call market neutral. That's what most banks do. So they are the market maker. They are obligated by law to provide a price for everybody who wants to buy or sell a certain asset class. So he
Yeah.
makes money on his spreads. I want to buy, if I'm buying at A, I need to be able to sell at B to make the difference between A and B.
Yeah.
Then now you've got the third class of players in the financial market. Who is a speculator?
Yeah.
It's like those traders what in need for the market, for the money.
Yeah. And that would appear to be like the vast majority of retail traders, as a matter of fact.
Absolutely.
Like, yeah.
Absolutely. So we want to buy, make sure we make money, or that's all we're in it for. So we are speculating. Yeah. Is it going to go up or is it going to come down? So after knowing the three classes that you have in the market, now if you want to focus on the market maker, that's what we're going to call the smart money.
Yeah.
So what he kind of looks at is like, okay, if I have a bond, if I have something that moves at 10, let's say 10 kilometers per hour.
Yeah.
I have another thing that moves at 5 kilometers an hour. If I shorted, if I went long 10 kilometers an hour, in order to take out the risk, I'll need to short 5 kilometers an hour, which gives a market neutral position. I'm zero.
Yeah.
So what if the guy who is moving 10 starts going 11? It's an abnormality.
Yeah.
So what I want to do is I want to go short the guy who is going 10 and go long 2 of the guys who is going at 5. And in the end, when he comes back to 10, I make a spread of 1. So that's pretty much the butterfly, where you kind of use 3 financial assets to create what we call a non-direction position in the market. But that's it. Let's not talk about that, David. It's crazy for
that's an entire thing itself. Yeah.
Yeah, absolutely.
So, what asset classes were you concerned with at that time? What asset classes and a strategy like this, as an example, would you say it finds application across asset classes, as an example?
Yeah, absolutely, but it's better in the futures markets because you can have you can have one financial instrument that's got different assets you mean. Okay, let's take for example the Bund. The Bund is the 10-year German bond.
Yeah.
So you can have one that expires in March. You can have one that expires in May, in July. You can have one that expires in September. You can have one that expires in December. So it's 4 months expiry. So with that, you've got the same thing, 4 of the same thing, but they are behaving differently. Yeah. So I used to trade bonds. So the main thing we're interested at the moment was interest rates. When you trade bonds, it's all about the interest rates.
All about interest rates, absolutely.
Yeah, but definitely interest rates now move currencies. Currencies move gold.
Yeah, absolutely.
Yeah,
absolutely. So a lot of those fundamentals from more traditional sort of asset classes filter into the FX markets right now. And because a lot of people are paying attention to it, it creates increased volume in terms of volatility, because a lot more people are now paying attention to it.
Yeah,
okay. Definitely. So we've got Joshua Jackson here saying, Mr. Mokom, what type of trader are you and which strategy do you currently use? And, it's always amazing to me how quickly traders want to talk about strategy. Without hey, how are we getting the money? It's like, hey, how are we getting the money? But before you answer that question, it's important that we establish that quality trading is built off of 3 tripods. Okay, having the right strategy, of course. I mean, that's definitely always it. And having the right risk management, then having a system to learn from what you're doing, which is some kind of a feedback loop, which essentially is a function of proper data collection, journaling. So proper journaling now ties everything together. You can begin to learn from your trading. So it's important before you answer this, because I always want to put within the right context the questions that are being asked. So before you answer, for all traders who are listening in, for all traders who are going to listen in later on, strategy is one part. Okay, so we will allow Mr. Mokom to answer that question. But of course, you would be the first person to I'm sure that you would agree with me that, hey, there are tons of strategies. And it's not about whether this is an absolute or that's an absolute. But just for curiosity's sake, I'll allow you go ahead and answer the question.
Okay. Okay, with my background, I'm a
Yeah,
swing trader. If you ask me which strategy I use, I'll be frank
yeah,
with you, I don't even know the name because I pretty
yeah,
much created it myself after a lot
yeah.
of back testing.
A lot of back testing.
Yeah,
So a
a
lot
lot
of
of back testing.
using previous data, a lot of using current
Absolutely.
data in terms of
Absolutely.
how forward
But
testing.
yeah, but one thing I'm going to tell you about my trading is I use a lot of COT data, the Commitment
Yeah,
of Traders reports.
yeah,
Like
absolutely,
I'm over it every single
absolutely.
Saturday. Yeah.
Yeah,
So
and
I get
I
it.
mean, yeah, I mean, like, it's very interesting. A lot of people want, maybe later on we can bring you back to
Okay.
have a joint session on the utilization of COT data. By the way, I've
Absolutely.
had like a couple of like students who are finding how important it is. I also use it too, so we can talk about it,
Yeah.
its importance, in analysis and trying to get a market direction
Hmm.
into the new week. So I'll probably see if I can allow a few other questions. But guys, you can put in your questions. We still got like another like 20 minutes thereabout before we head up. So let's talk a little bit about risk management.
Okay.
Welcome. Let's talk. I mean, you have it. You have a master's degree in it. So hey,
Yeah.
I want to imagine that it's going to be something you're very comfortable talking about. So, how important would you say risk management is, and how does it tie into like how does it tie into having a plan for a portfolio? As an example, like you want to manage a particular capital, for instance. I know that one of the arms or one of the parts of what you have had to do over time, maybe even currently still doing, is ascribing, taking responsibility for capital, essentially, and
Absolutely.
trying to utilize skill, this knowledge to grow that capital. Now, I want to imagine a lot of people, retail traders don't think they don't talk a lot about this when they're getting started in trading in terms of
Mhm.
having a portfolio plan and how risk management ties to that. But
Yeah.
maybe we can talk a little bit about that. There's capital now in a person's. I'm giving a scenario. A person has capital. He is like the principal portfolio manager of his capital. So the capital is right there in the account. How important would you see risk management tying into starting even from the very beginning to have a plan for that portfolio going forward?
Okay. Okay. You have to differentiate first. Before I get to that, David, I want to talk about something. I want to do a differentiation between a trader and an investor. It's important to answer
Yeah,
this question because
yeah,
the most important data measurement that most people do not understand is what we call the standard deviation.
okay,
And if I were a hedge fund manager, a portfolio manager, I was looking to invest in a fund today, I only
yeah,
want to do one thing. And what is your Sharpe ratio?
yeah,
Which is a function of risk.
yeah.
Okay. The adage out there is all right. Most traders say, okay, 1%, 2%. I think they don't
That,
understand.
that's a little bit too cliche, as a
Yeah,
matter of fact.
absolutely.
In the grand
Imagine, yeah, imagine you were trading $100 billion and you lost $1 billion on a trade. You're going to get shot, man.
Absolutely. And of
Yes,
course, we have companies like BlackRock as an example that's
yeah,
got over 2
two,
trillion, $6 trillion
absolutely.
in assets
You
under management.
manage, yeah.
You can't
You
do
can
one
lose
percent of that.
1%.
That's
Yeah,
do that.
yeah,
So
you can.
that actually is relative. That's
Yeah.
relative.
Yeah,
Yeah.
so risk management for me, I think is the cardinal, is the principal thing in trading. Why? Because if you had, let's say, $1,000 to trade, and you put $10 on every trade, that gives you 100 opportunities to learn from the market. Because
Yeah.
I'm assuming that everyone after a trade, win or loss, is going to take time off and like
Think
have a,
about it.
yeah, think about the
By the way,
trade.
that assumption is not always true for a lot of traders. Maybe you might even flog it a little bit how important this is to do that.
Okay. No,
Some people just keep going essentially.
it's critical. It's critical. I mean, you cannot. I mean, in the military, they call it debrief. You need to debrief every time you
Yeah.
take a trade. What happened? What did I go wrong? The last three times I did this, what happened? Am I losing it? Is the market profile changing? Because a market will either trend, or guys say it's gonna go sideways,
Yeah.
Trend is going to go sideways. So if the market is going sideways and you're trying to, let's say, trade a strategy which is not mean reversion, you're going to lose.
Absolutely.
Yeah, you're going to lose money. But if you are trying to trade a mean reversion strategy in a trending market, you're never going to get an entry.
Absolutely.
So backtesting, or not backtesting. Backtesting is something else. Debriefing, taking your time to ask yourself questions about what happened.
Yeah.
It's very important. I think it ties down to risk management, because if you do not give yourself enough trading capital, and when I say enough trading capital, I don't mean $10,000 or $1 million. Like, if you don't give yourself enough opportunities to be able to learn from the market, like create a portfolio, like a data of 100 trades, 200 trades.
Minimum sample size.
Absolutely. Absolutely.
And of course, I mean, just to add to that, I mean, the more the data, the better you can identify patterns in that data. So as it's just basic rules of statistics. Like, the more the data, the more. So I mean, super interesting, and it's amazing how many people think they can get away with not doing this and still be successful in the long term.
It doesn't work. It doesn't work. I mean, I'm guessing in your part of the world, or your part of Africa, there's a little bit of laissez-faire. In our part of Africa, it's not the same.
Yeah.
So guys go around and say, I can do like 10% every month, 15% every month. Man, you're gonna go to jail.
And we've got a lot of companies, like, would I call them companies? I don't know if that would be like the right word to call them.
Mm-hmm.
So they've literally populated Nigeria, as an example. They started to witness, you can do, I mean, there's companies that say you can do 15% a month, absolutely no risk.
Are you crazy?
I usually share with people that you don't need to read too much in between the lines. I mean, this is a Ponzi. What is a Ponzi? A Ponzi is no more than offsetting old liabilities with new capital. Like, you have, and that can go as long as a new capital, as a matter of fact.
Yeah.
So again, it ties down to a lack of fundamental, knowledge about how the financial market works. I think and that's one of our mandates here, to try to, because if you continue to have a population of lies, you're going to need to infuse the truth to push that back a little bit, and not enough people that know are talking about it. Not enough platforms like this exist, and I hope that we can continue to sort of get that word out there, a little bit more. So very interesting to talk about risk management. And again, you were saying, I wanted you to talk a little bit more about the fact that risk management could be possibly flexible, essentially to the needs of the portfolio. So as an example, you can start out with saying, okay, this is going to be, because in every form of trading, there is going to be some level of risk. Every form of financial market trading that involves, securities that fluctuate in price, there will be some level of risk. Okay, so in terms of, if you could talk a little bit more about pre-planning, according to a person's risk appetite, and maybe drill it down to something that we can to something that an individual trader can maybe understand, like a retail trader.
Okay. All right.
How does a trader ask himself the question of what kind of a trader am I relative to risk appetite? How then can the trader now go to a point where he says, okay, I can formulate a portfolio, take opportunity, but have a portfolio that does not exceed XYZ risk, that type of thing.
Okay, I think it's all about the system you're trading. Okay, I'll take myself for example. I'm a trend trader, right? I'm a swing trader. So if you're a swing trader, you're going to catch a trend. You want to catch a trend. So people, I think people misrepresent the meaning of a trend. So what is a trend? I mean, it's higher highs and higher lows. So
foundational meaning, absolutely consistent across. Yeah,
absolutely. So you need to define the time frame. Am I trading a trend?
Because they exist. Trends are fractal in nature. They exist.
Absolutely.
trends within trends.
Absolutely. Okay, then imagine I wanted to do a counter trend trade, right? I'm a trend trader, but my fingers got itchy and I said, okay, I wanted to do a counter trend trade.
Yeah.
I don't have the data because I've tested so much on trend trades that I
Yeah.
want to do a counter trend trade. So if I was risking 1% of my portfolio on every trade, do you think I should risk 1% for this same trade?
That you don't have enough data.
Absolutely. So it's so
Yeah.
you can so it's what I think is most guys, if you back test your if you study your performance, you're going to be able to do what professional footballers do. It's like, okay, if I were playing with the right leg, I've got higher probability, so I can take more risk when I do this. Oh, if I want to overtake in a race, I'm better at a bend. So when I'm at the bend, I'll pull in, I'll put in it, I'll go all guns blazing. So that's
Yeah.
the idea of risk management. But I think you want to have a maximum amount of risk you want to take for a trade. I'll tell you, David, mine is 1%. No way above 1% do I take it.
And you know, Mokom, I'll tell you something interesting. Yeah, I
Yeah.
have run a number of I've run a number of like analysis and tests and whatnot. It would interest a lot of people to know that sometimes, okay, even reducing the risk per trade helps the overall performance over a long period of
Absolutely.
time. Like if you
Absolutely.
look at the data and you see that you perform better, you
Yeah.
will, well, with the same strategy. If you increase risk, you increase your position sizes, so you have to make more money. But it's not true. When you look at the data, you realize that, and I've seen tons of and tons of data that will show that when you reduce the risk per trade, it actually makes the portfolio performance better.
Absolutely. Because it reduces the standard deviation.
Interesting. So
Yes.
I mean, then
Yeah.
one wonders, why do so many people not, like, get this? It's, but again, a lot of people who trade do not have mentorship. This is why it ties back to the importance of mentorship,
Yeah.
especially quality mentorship from people who have who have spent time. Someone would say, for instance, if you want to be and this is the challenge for a lot of retail traders. The trading can appear deceptively easy. Like, you just log in on your platform, you've got like money. All you need to do is buy or sell. How hard could that be? But then, if you wanted to be a professional in anything, you need to spend time learning
10,000.
about that.
There's an adage, 10,000 hours to make you professional.
And the interesting thing, I've seen a lot of traders who get into trading after 3 hours. I mean, 3 hours of an exciting video, strategy, and I also in technical analysis, which is the prime way in which a lot of people sort of take their information and trading decision. There's something called screen time, which essentially speaks about how much total hours or how much time you spent in front
Yeah.
of the screen, because competence has like different levels. It's one of the
True.
reasons why you get on the road and you can sort of drive without thinking too much about it, because you now have a level of competence called unconscious competence, which is a function
True.
of you knowing, and that plays out. I see that plays out, especially for discretionary traders. That plays out a little bit more. But lastly, I mean, we're running into the last minutes of this very exciting, very interesting conversation. I did tell you that I was going to ask you to show us your office. I love that office, by the way. I love that. I did ask you. So, guys, if you're curious about just your office is in Douala, correct? Is
Yes,
it in
indoor.
Douala? Okay,
Yeah.
wonderful. You're going to show us that office. I mean, I love that office. I mean, so before we do that, I wanted us to talk a little bit about auto trading.
Okay.
I want us to talk a little bit about auto trading. So a friend of mine just yesterday reached out to me. I don't know if he's listening right now. If he is, I don't know. Reached out to me and shared with me this performance of these bots, like this, that takes decisions, and he was so excited about it. The bot had done like, was it 10%? Like 10% in like maybe 7 days or something. And he was super super excited. And he had the thing where he was treating it like some kind of a holy grail. And I went on to try to share with him that a bot essentially is only as good as the mind and the mind that designed it. Essentially, this is, so if you could just touch on that a little bit, because we want to dispel a lot of untruths about trading. We want to do that. So, you know, if you just touch the positives, okay, because there are positives in automated trading. Okay, I've done a lot of quant trading. I've done a lot of quant trading for a couple of years now, and you know, but just speak a little bit about it, and let's speak about like the other side in terms of how retail traders consume.
Okay. Most people do not. If you've worked for a fund, like Amplify had a fund, and I was able to get into the fund and see how it works. There are times when they switch off the bot, and there are times when it's put on. There are times when you take it, because when you trade, when you build an algo, it's built for a specific market profile. Because you've got, for example, bots are built on systems. Let's say, for example, you incorporated a moving average into your system. During high news events or interest rate changes, most bots that work are, okay, if let's say Draghi was talking back in the days when Draghi was still
president. When Draghi was messing up the market a lot. Yeah, back in the day. Okay.
You see what he did in 2011 July, when he said we will do whatever it takes to save the euro. The guy sank the market, man. Fuck it up. So the thing with what is you need to be very careful, because they are programmed of past data.
Yeah.
They are programmed of past data, and the market profile changes. You're looking at the future. So can you drive a car really looking at the rearview mirror?
The rearview mirror. Wow, that's like, I feel like putting that up. Can you drive a car looking at the rearview mirror?
Absolutely. Yeah, so it has its advantage. Like, there's a fund called the Virtue Fund. Since its inception, like for the first 7 years since its inception, it never had a down day.
Interesting.
Yes, it never had a down day. Bert, trust me, I don't know systems. 10%. Warren Buffett is one of the richest men in the world. Annualized return is 28% per year.
Now, so when you hear that kind of data, for instance, Warren Buffett, Warren Buffett's funds at Berkshire Hathaway, I mean, and we hear what a lot of companies profess to do right out of Africa here. I mean, you know, and these are firms that, like Berkshire Hathaway, for instance, stupendous amount of resource. You know, stupendous amount of resource. Lastly, I'm going to ask you something else, before we go, but just talk about that. I mean, like, why traders might need to be a little bit suspect when they hear some of this exceedingly high rates of return.
It's because I think about it. Most people do not understand what a trader should do, because taking $1,000, for example, to $1 million is the 1% and the 1% and the 1%. Maybe could be able to do that with a lot of luck and prayers. But what you want to do, for me as a trader, is if you want to build, what you want to do is trade large capital, so you don't need to take an excessive risk to make money.
Absolutely.
And the way you want to trade large capital is to create an auditable track record.
Yeah.
Because you've got insurance funds, insurance companies, I guess it's the same thing in Nigeria. They've got a lot of books, and they need to make it work. And what they want is risk.
I'm sorry to cut you. I remember we were having a conversation, and we had a conversation, and you mentioned capital being an expense. I remember that.
Yeah, absolutely.
I mean, when all these companies have all of this money, it's an expense to them. They need to dispel it. This is one of the reasons why there's so much potential in trading. If a person can go ahead and develop the skills, with verifiable outcomes, absolutely, like positive outcomes. Just yesterday, I had a call with one of the leading sort of buy-side firms. And it was exciting. A lot of them are seeking to explore other avenues because of shrinking yield in traditional. Nigeria's environment for traditional investments right now, very poor, low risk investments, very, very poor. So, a lot of companies are looking to explore that. But just please go ahead. I just thought to interject that for traders who are listening in, and, about the potential. Yeah.
It's about building a track record. If you can build a track record, a 5 years track record, it's going to be pretty easy to raise $1 million to $5 million. It's not difficult. If you work with the funds of funds, there are platforms that's what they do. They look for the best traders, they test you over a period of time, and if you're profitable, they would fund you. But the risk is really going to be limited. Like, for example, zero leverage, not more than 1% risk on a trade, and they're going to tell you maybe maximum drawdown 5%. And you kind of ask yourself, why is everyone so focused on this? It's because risk management is what keeps the bullets that you use to go hunting.
Yeah, absolutely.
Yeah, so you keep your risk low, you build a track record, audited. So okay, let's say today I was starting out in trading. What would I do?
Yeah.
What I'll build a track record first. So let's say $10,000. I'll trade it consistently, and I'll try to do like 5% every month. It's way high if you want to benchmark it to the S&P. So 2 to 5% every month consistently over a period of about 3 years. I'll get one of the big 4 auditing firms to audit me. When these guys audit me, then I can start talking about raising capital. Cameroon, for example, our savings, a savings account in Cameroon pays 4.5% per annum.
Yeah. In Nigeria right now, it's about 3%.
You see, so
way below inflation in Nigeria, way below.
Yeah. So if you do that, then you could get $1 million. If you got $1 million to trade, and in 1 year, for example, you did, let's say, 30%, and you had a 50% split, it's $150,000.
Just like that.
That most senior bankers would ever make.
Absolutely.
And most of the guys who see the fund going up, the performance, like being consistent, the funds are going to go up, and then you're going to find yourself one day maybe trading $1 billion. And just the management fees of 1%, like is the standard in the industry today. Used to be 2%, it's 1% today.
Yeah.
It's $10 million. So that's how you make, I think that's what you do. For the guys who have funds, let's say you were able to put up $1 million into an account and start trading, I would advise you not to go for capital appreciation and go instead for cash flow. Because you need to know what you...
Yeah, you need to share our audience because this is a fantastic session, to be honest with you. Like I think that we're gonna have a lot of people revert back to this session. It's a fantastic session for every trader. But just tell me, just share with the audience, the difference, why that's important between capital appreciation and cash flow.
It manages your expectation as a trader, because most people get into trading without knowing what trading is. They think the Insta influencer who used £500 to rent a Ferrari for a day and published it, and he's making more money off the hits on his account than on trading.
Yeah.
You kind of think that's possible. You can do that. It isn't. So what you want to do is, there are 2 ways you're going to make money in every investment. If I invest, for example, 1,000 into a Dangote share, right? Yeah. It could either pay me dividends, or the price of the share could double.
Yeah.
If the price doubled, I've not cashed out. It's called capital appreciation. But if it paid me dividends into my bank account, that's a cash flow. I'm making off investment. So think of guys who want to preserve their capital. I've got $2 million. I don't want $10 million. What can't I buy with $2 million? Why will I need $10 million to do it? Now you're more interested in cash flow because you want to finance inflation. You want to make sure that you keep at the same level. At this point, no risky trades, just 1%. Every time you're hitting 1%, 2, 3%, you're protecting yourself. You're taking some meat off the table.
Yeah.
That's good. Now, capital appreciation for me is mostly for those who want to build a career in fund management.
Yeah.
So you take a small account and then you build it, no drawing. You're not withdrawing from the account because funds are going to have lockdown periods.
Yeah.
So you build, get it tested, get it audited, then you move to big capital. You can keep your risk low, you can sleep well at night, and you're still making money that you want.
Yeah. Wow,
Yeah.
it's been an amazing session with you, Mokom. Quite honestly, I know that we're definitely going to bring you back to explore some of the areas where we couldn't explore. Guys, okay, listen, if you got questions, you can leave some of those questions before I let Mr. Mokom go. He's going to be in Nigeria tomorrow. And like I said, I'm going to be his conduit person. So if you want to see him, you got to get through me. You know, it's going to be in Abuja. I'm looking forward to seeing you here, bro, tomorrow. So we can, share a lot, and I'll try to host you in the best way that I can. So guys, you can put up your questions. I know the comments usually come in a little bit late, but let me take this one that's currently on screen. I believe you can see it. It says, "Sir, do you mean it's not really about 1 to 2%, but the amount you're willing to lose and it won't affect your whole equity badly?" It's a little bit of a jumbo question right there, but still, I think you might get the flow of what he's saying.
I think I think he's correct. I think the way he's looking at it is it's the right way. I think he's got the right philosophy. You don't want to lose money that you can't afford, or that's not going to let you wake up in bed and take the next trade.
Yeah. So you have to be practical about what that amount is. And of course, this goes on to you speaking about. I mean, come on, if you lost $1 billion, there'll be no excuse for you.
Absolutely. I had a guy who in London, he did every trade he took, he did 10% risk, and he was buying like 70% on his trades. But this guy took maybe 3 trades a year.
Wow.
Yeah.
So that now goes into another dimension of it.
Absolutely.
And I think a factor that a lot of people don't probably realize is, and I've come to see that this is important, is what you call frequency of trades. That in itself is something. So it's one thing for you to talk about risk per trade, okay, which speaks about your risk on each trade. Then there's also another thing called frequency of trades. And I think that it's important to maybe be able to pre-plan that a little bit. Now we're actually in the last minute of this. Very quickly, Mokom, let's talk about artificial intelligence in trading. Okay. Now, the general idea of artificial intelligence is that machine can be made to learn.
Yeah.
So machine can be made to learn from past data by itself. And when we talk about, because the concept in itself is exciting. It's an exciting concept. When you think about, for instance, forward test, learning from what's happening. We've spoken about this already, how important it is. Learning from what you're currently doing. So artificial intelligence, in terms of theoretically, appears to be fabulous for the financial markets in the sense of now computers can by themselves learn how to take better trades from data in real time. What do you think about the prospects of artificial intelligence for trading, and if maybe we shouldn't be so excited because the financial market is not like anything else? How do we, but theoretically it's exciting. I have a background in engineering as an example, so my quant training experience allows me to look at some of those things. And when you think about artificial intelligence being applied to other areas, now we're looking at what it could mean for trading, whether we should be excited or we should be excited in a cautious way.
It should be exciting in a cautious way, because you can apply to other things, but when you apply to trading, now you're dealing with greed and fear, which the things that you can't program, how irrational people can get.
Yeah.
So if you read the story of LTC and long-term capital management, these guys who would use the Merton Black-Scholes model to predict what was going to happen to interest rates, went long securities, went short on the securities. When you had this frenzy that hit the market, all logic goes out the window. So it would be great if you could program black swan events.
Okay.
Black swans.
Yeah, if you could if you could take in that information.
Absolutely.
Yeah, well, I've seen some exciting reports for artificial intelligence. I suppose to end this session, it will be like, let's keep our fingers crossed. Let's keep paying attention to what's going on, and let's keep doing the work that we're doing in trading. I'd like to say a very big thank you to you, Mokom. It's already 9 p.m. down here. We really had a fantastic session with you. We got just one last question I'm going to take. So Onyeka Ogbona says, if you risk 1% per trade, what percentage risk do you advise in all trades for the day? And I don't think the question is actually all trades for the day. I think the question actually is all trades per running currently on an account, because if you're a swing trader, you're probably not looking at a time frame of like the day, you're looking at a couple of days. So what he probably is trying to ask is, if you're risking 1% on a trade, then what would be the total cumulative maximum exposure of all open trades? That's probably what he's asking. So if you want to compare that,
minimum, I'd say a minimum 5, maximum 10.
Yeah.
If you need 10%, draw down on your account on all trades, close all trades, and take a breather. Yeah.
Okay. So yeah, that's like, I usually prefer a little bit more conservative. You know, one of the funds that we run a maximum of 4% maximum exposure, because again, that goes into the portfolio plan. Okay. If it's a super conservative portfolio, you want to ensure you shrink that a whole lot, and of course, that limits some of the exciting opportunities you can take, how much money you can make, but it still keeps within the portfolio plan. Mokom, once again, I really appreciate you coming to hang out with us on the Traders Hangout. It's very refreshing to to have you share about everything. Guys, if you want to show your appreciation, you can do that. Let me put it up. But really thank you so much. It was really a pleasure, and I'm looking forward to seeing you tomorrow. By the way, for our community, if you're listening in, like we mentioned, it is critical for you to have the right kind of the right kind of mentorship. You want to head over to Traveling Markets website. If you want to find out, we've got a course up in there that helps people sort of learn how to trade. And we have a community support for that, and all of that is fully digital. So wherever it is you are, you're listening from, you might want to head up to this website. We've got a number of courses, and we're developing more that really gives people essentially the right kind of grounding to be successful, because there's so much information out there. If you're not careful, you're going to be lost. So you need the right thing Joshua Jackson is saying thank you. Mokom, I'm going to see you in Nigeria. I wish you a safe flight to Nigeria tomorrow. Thank you so much. And to the entirety of everyone who joined us, we really appreciate you being here. Remember, always stick to your trade plan. If you're listening, always ensure that you don't exceed your predefined risk per trade. And ultimately, always try to learn and journal your trades and learn from your trades. Thank you very much, guys. Thank you so much, Mokom. This is where we end the session. I'd like to say good evening to you and good evening to everybody. Bye from this side. See you guys next time.
All right, bye-bye.